All right, guys, another day and no surprises until now, so that's pretty good. We haven't had any surprises over the Middle East or either Trump or Israel, Iran, the Strait of Hormuz. Nothing really happened in the last 48 hours. So besides a few things happening from the Fed, all right, so from the Federal Open Market Committee, from a meeting that one of the participants from the Federal Open Market Committee, Jim Bullard, participated, changed the sentiment of the CME FedWatch to. That's only a sentiment, it's nothing 100%, okay, just making very clear here. It's just a sentiment, all right? So it can change every single day, it can change every single minute, so don't use that as a 100% go-to, all right? That being said, I just want to jump into that and then sort of tell you a little bit more about the trades I've been talking about for the whole week until yesterday. And also, just so you guys don't forget, we do have webinars every Tuesday, Wednesday, and Thursday. So the trades I've been, I'm going to talk today, I've been giving out on yesterday's webinar, so Wednesday one. And if you haven't watched that live, you can watch the replay. Just go into the channel and look for the last webinar. That's going to be the one that you can watch the replay. All right. Don't forget, subscribe to the channel, give us a thumbs up, and let's go to the video. Okay, so a few things have been happening over the last couple hours, a few hours, not couple hours, with Jim Bullard. All right, so Jim Bullard have been stating that the oil prices have been going down and that for inflation most likely will continue to be moderated and nothing will be surprising to spikes on inflation. So that being said, basically the CME FedWatch to classify a 68% chance of a cutting of a 25 base points cut into September. All right, before it was 47%, so below 50, so 3% below 50. So I was 53% above, 53% expecting no cuts. Now there was a big change, a big sweep, and there is above 65. So if I'm not wrong, was 68. A month ago was 47.7, and then a week ago was 56.3, and now is at 67. All right, so 68.6. So basically a big change from a month ago to today. All right, so yesterday was 70%. So with those comments from the Fed, from Jim Bullard, it's one of the key drivers behind the US dollar weakness as well. So we saw the US dollar breaking below the lows on the New York session, and therefore with now the DXY extending its losses, we have stronger other currencies, like we have a stronger we have a stronger Australian dollar, stronger New Zealand dollar, stronger the pound as well. We have strong euros, all right? So strong Japanese yen as well. So all of those currencies I've mentioned it yesterday, and also gold as well. So gold, we've been looking to try to catch a short position on gold. Right now, gold is trading at $3,335, very close to our entry point at 3,300, I can't see that, $3,350, all right? So we're waiting for that. If you couldn't come yesterday into the webinar, make sure to rewatch the replay, and you will be able to understand a little bit more what's going on into those markets. Cool. So that being said, what we can expect coming after is a continuation of the escalation on the DXY. So basically more US dollar weakness coming in, more DXY weakness coming in, and that is basically making euro go higher, making the Australian dollar go higher, making the New Zealand dollar go higher. So anything basically related to trading against the US dollar, like Aussie against USD, or maybe New Zealand dollar against USD, or even euro against USD, or Japanese yen against USD, like US dollar, Japanese yen short, are good trades. All right, I've posted yesterday onto my Telegram these trades here. So you guys can see right now, also you can see the before, all right? So that's the before, and I've talked about US dollar short trade idea and euro dollar long trade idea, all right? So that was 11:21 a.m. in Australia time yesterday, so the 25th of June. That being said, then, 24 hours later, pretty much, we had at 11:26 a.m., we had euro dollar with 1.19 in profits, not yet closed. I think it just hit a TP today, like a few hours ago. And then the US dollar Japanese yen, we got stopped out with a -1% for the riskier entry, because on the webinar on yesterday, I've explained that, all right? So I've talked about the I've talked about the riskier position and the more, I would say, swing trade, sort of more easy go position, all right? And that was the one that we catch it. So we catch the first one, the riskier, we got stopped down, and then we catch the bigger position, and we got it's continued to run. Okay, so this is pretty much, and you can see, live here on the screenshots as well. And you can see there's only a few of the couple of the trades I've been giving out last webinar. All right. So if you don't want to miss any more, please put in your agenda from Tuesday, Wednesday, and Thursday. I do have those webinars every single week from 4 to 5 p.m. in Australia time, okay, Sydney time more specifically. Now, if you are watching this video on a Thursday, most likely we will have the webinar very soon at 4 p.m. in Sydney time. So await everyone there. Hopefully I make a few things clear, and yes, I continue to look to short the US dollar and long euro, long Australian dollar, long Canadian, long New Zealand dollar against the CAD. If oil WTI prices, Brent oil continues to fall, we may continue to see more and more depreciation of the Canadian dollar. All right. That being said, if you have any questions, please put down in the comments. Otherwise, don't forget to join the Telegram as well. Link is on the description. And I see you into the webinar, or I see you into the next video. Bye bye.